Morning, everyone. Greg here from Master Trader. So the markets came back from the edge of falling into the void below down here. Day before yesterday, the S&P broke down through the bottom of this trading range that had been forming here. You can see the bottoming tail here. Inside bar bottoming tail, another bottoming tail bar holding on this area that we call minor support. And each time it came up to the top of the range, there were sellers. And then the day before yesterday, prices broke down and closed below it. Now, historically, when that happens, the next thing to happen is an inside day a lot of times. So after a wide range day, many times there's an inside day. And then there's follow through to the downside, or what we call a 1, 2, 3 continuation pattern. And that would have tested the 50-period moving average, the green line right here. That's widely followed moving average, especially on indices. And from there, it may have stalled intraday. And again, I'm talking from a historical perspective with this kind of a pattern, a breakdown like that. Prices would have eventually continued to break to the downside here and could have come all the way down to the support, or they would have formed some area of support somewhere in between here and begun to repair the damage. Rather than doing that, prices gapped up significantly into this wide range red bar. And one of the rules that we have at Master Trader is in a gap situation like this, if prices can gap 50 to 60% into a wide range red bar like this, the odds of negating it increase dramatically. And after doing so, prices continue to stay strong throughout the day, even after moving up, significantly off of this low. They were able to stay up there, which was bullish. Now, this morning, they're trading down a bit. They try to pop back up toward this higher resistance area and came right back in. So now we're beginning to form another trading range here intraday. So we've stopped at the lower part, and here's the upper parts of the range right here, which is looking at the daily chart. There it is. So I'm just lining this up with two time frames here. So sellers are going to be at this resistance area, the top of the range, and buyers are going to be at the bottom. Now, prices broke down through the bottom of the range. And if you go into yesterday's video, one of the things I spoke about, we'll look at the futures, is breakdown failures to a new low and then a reversal, which is pretty common in indices. What happened here, now you could see, let's go back here, and you could look at prior videos, right? I showed you how the spiders did not break out to a new high up at this top of this range here. However, the futures did. So futures traders were anticipating that the rest of the market would follow, and when it didn't, it came back in. There was a topping tail here, testing the top of the upper part of this range here. And then the day before yesterday, prices fell hard, but they did not break down below the bottom of the trading range. So futures traders at that point were like, well, we got burnt up here, and it didn't follow, so we're not following it to the downside this time. And then there was this big rally. It was a huge day yesterday. So rather than having the gap up, because the futures are trading 24 hours, they were already up, and that's why the spiders had gapped up as far as they did. You've got this wider range green bar. So the trading range continues with tails and overlapping bars and, big down days and big up days. And historically, these kind of wild, whippy, wide ranges result in a rolling over or a top. Now, that being said, it's not a top until it's a top. And what does that mean? Well, it's got to break down through this major support level, and so far it's holding. And you can see in the weekly chart it's in an uptrend, and up until now it's just a sideways consolidation within an uptrend, which suggests, just because of the trend being up, it suggests a continuation to the upside. Now, we wait, right? You wait to see if that happens. So trading here, from this time frame, best not to do it. You're just going to get whipsawed. And even from the daily time frame, you're going to get whipsawed. That doesn't mean you can't trade the top and bottom of the range intraday at the appropriate time. So that encompasses an understanding of how to utilize multiple time frames. So I said the trading range continues. The NASDAQ, which had this big, huge break to the downside, right, even bigger than the one here, and this one recovered immediately, we're now forming another trading range. We get another range here, and buyers are stepping up here, and even after breaking down below the 50, big move up, and now prices are rolling back over. Right, here's intraday resistance, and they're rolling back over. Can they stop here? You can see that little shelf of support right there where they had stalled, which is directly to the left. Other than that, there's nothing really here. And then, so if it doesn't hold here, that opens up the door. Can this go all the way back down to the bottom of this green bar? Well, of course it can, but that's the type of crazy whippiness that's going on right now, whereas you would not think, because historically it just doesn't happen that often, you wouldn't think that a big red bar like this could result in a big green bar right back up again. And now when you have that, it's hard to imagine a big red bar right back down again. But with this type of whippy price action, that certainly is possible. And that's why just stay away from it unless you're an intraday trader where you can read price patterns where you're getting a move up into resistance. The momentum begins to slow down. Smaller ranges here. And then I'll make this a little bigger. It attempts to move up. You see this little topping tail right there where it attempted to move up and rolled back down. And so this type of price action right here in alignment with a resistance area makes sense. That same price action here, if that was to happen, would not make sense because it just came off of a new low reversal and it's reversing back up where there is no resistance. So it's the combination of concepts that come together that make price patterns high probabilities or the lack thereof. All right, oil. It's been rebounding. It's starting to come up into this resistance area right there. And in prior videos, I said this is the place where it's most likely going to rebound. So as a short-term trade, that was certainly something that you could have considered based on the analysis that I gave you. How far will it go? Probably not a lot farther before sellers begin to take control. But at the moment, the intraday trend is still higher. If you followed what I told you in the financials, you're having a good week. As I told you, it pulled back to support here, and this is where buyers are going to show up. Now as it's coming up into resistance, it's actually up above that a bit, gapping up this morning, up around into this area. And look where it's gapping up to, folks. Gapping up about $25, $25.10. All right, so right in this area right here. How much further do you think it's going to get? Do you think this would be a good place to sell and take profits or partial profits here, and then start trail stopping this on a short-term basis? I think this is probably going to stall up in here just because of that resistance area, and then we'll see how it shapes up. In prior videos, I showed you this pattern. I said, well, if it breaks below here, we'll look for a downside. But I told you that if it fails, odds are it's going to fail in a big way. Because historically, that pattern is very powerful when it fails, and you get a big move to the upside. And, I told you JP Morgan, and if it could get through 88, which it did, now it's at almost 93 this morning into resistance. So it may get a bit further here, but odds are there's going to be profit taking after the first 30 minutes or so, or it could be after the first 5 minutes. Something to consider. Citibank also moving up, I had mentioned. Up there nicely. There was the pullback to the 20. And Goldman Sachs, which had been showing relative weakness, is up here around 228 and still showing relative weakness, but it's certainly one to keep an eye on. These financials begin to pull back, looking for all of them to go higher. All right, I'm 10 minutes into this morning video here, and so I hope you've picked up a few things about trading ranges here. And you can see Goldman here did another, just another trading range. You can trade these trading ranges at the appropriate time. All right, everybody, good trading. And any questions, you're welcome to email me, greg@mastertrader.com, and check out our basic course. It's free. You can go to the site under education and sign up for that basic course. A lot of things to learn there about how the markets operate, and you'll gain a foundation for understanding technicals as well.